Hey guys, welcome back to Blue Collar Crypto. We're going to take a quick look at Archangel token staking, see if we got any other news going on, and a quick look at the markets. Man, it's a crazy world out there in crypto, that's for sure. So one thing I want to talk about, I talked about the staking pool before, but staking pool opened yesterday. Today's the 16th, it's Monday of May. It opened on Sunday, like at midnight. I guess it opened up this morning, right? Man, what day is it? What time is it? Whoa, time warp, crazy. Anyway, staking pool is open for 7 days. It ends, whatever it closes, May 23rd at 4 o'clock Greenwich Mean Time. I don't know what that means. I could figure it out, but you could figure that out. The 23rd is Monday, so I'm pretty sure it is on Sunday. If you're on the East Coast in the United States, Sunday night, like at midnight, I think that's when it goes down. So Staking Pool 2 has some new features. The harvest function, so you can claim all your rewards at the very end, so after the 90 days. So it's locked for 90 days. If you really need to pull your tokens out, there's emergency withdrawal. You can totally do that, but you lose all your rewards. No worries. If you really need your money, that's cool. At least you have the option, right? But there's a harvest function, so you can claim all of your rewards without withdrawing your original staked Archangel tokens. That's cool. That's at the end. So you can just leave it in there. You just leave it in there, and it's one click to get all three of the tokens: the Archangel rewards, the Scratch rewards, and the Guardian rewards. Okay, so there's also the unstake function. So after the 90 days, if you wanted to unstake your Archangel and not leave it in there for staking pool number 3, you can totally do that, but you definitely want to harvest your rewards first. According to this, you want to harvest your rewards first before you unstake all of your Archangel tokens. If you don't, you're going to just pull your Archangel tokens out. Well, like they're doing the calculations are based on how many tokens you have in there in the pool. So if you pull them out, then there's no, so the denominator is 0. Right? So what's 0 divided by 0? You can't even figure that out, right? Like ask Siri. She pretty much calls you an idiot. That's besides the point. I digress. Okay, but the rewards tokens for staking pool number 2 are this. Archangel tokens originally were going to be 100 trillion, but Archangel is going to provide another 50 trillion ARCA tokens. The extra 50 trillion ARCA tokens is from Archangel buybacks. Scratch token, this is going to be 250 trillion Scratch token, and the Guardian token is 750 billion Guardian token. Of course, they have different token supplies, so it's I think it's 2%. I'm not 100% sure what Guardian is, but that's just the initial donation, or the what do they call it? The Genesis contribution from all of those tokens to the pool. That doesn't include, so Scratch and Guardian both started in April. It's May, the middle of May, so they've been out for what, a month or 2 months? I don't remember exactly, but all the volume of Guardian token and Scratch token since they released, well, Scratch token, 1% of the volume goes to the staking pool, which is this pool right here, staking pool number 2, and 2% of the volume for Guardian is going to go into this pool. So that's could be a lot of tokens, honestly. And in 90 days, I mean, it's just going to continue to be dropped into the pool until the staking pool 2 ends. But the thing is, staking pool 2 just started, and the tokens were released a month and a half ago. Well, all that volume is been put into different wallets, and it's going to be dropped into the staking pool once this one opens. So that's pretty cool. It's a lot of tokens, and could be something great, you know. I don't know. We'll see how it plays out for this 90 days. I don't know. This market is looking kind of brutal right now. Honestly, I think it's just going to keep going down, but let's see what else we got. Okay, we're just going to take a quick look at the market. Right now, total market cap of all of crypto, $1,283 billion. It's down a lot, man. You remember when it was $3 trillion? Wow, those were the good old days. Bitcoin dominance 44.4%, Ethereum dominance 19.2%, and Ethereum gas fees right now are pretty freaking low, 32 GUI. I just got into the staking pool. It cost like $2 in Ethereum to confirm the contract, and then I sent the Archangel tokens to the staking pool, and I think it was like $8. That was last night, of course, like 24 hours ago, almost, not quite, but gas fees are real low right now. If you're looking to get into Archangel staking pool, now's a good time. I mean, who knows what's going to happen with gas fees. And they spike, you know, like in an hour, it might be like, oh man, the GUI might be like 500 GUI all of a sudden. You're like, what happened? I have no idea. But, I mean, lately it's been dropped down pretty low. So good gas fees right now, 32 GWI. A total market cap of crypto in the last 24 hours is down just over 3%. Oh, holy hell. The crypto fear and greed index is 8. That's a thing. I didn't even realize. Yesterday, 14. Last week, 10. Man, super fearful if you weren't aware. Hey, you know what, man? Just a side note. Crypto Deb, I follow her on Twitter and on YouTube. She put on Twitter, I don't know, last week, maybe a week and a half ago, that she has cancer. Didn't really say what kind of cancer. I'm not trying to get into her business or anything like that, but heartfelt, you know, I mean, I'm sorry to hear that. That's no good, you know. I hope all the best for you. I hope everything works out. I'm really sorry to hear that. That's never a good thing. Hopefully it'll work out good though for you. I hope you come through this, Crypto Deb. All right, back to the coins. Token data. We're on Guardian Platform IO, looking at some token data. Bitcoin right now is down 33% today, down almost 1% on the week. Okay, 30 days is down 26%. Ouch. Right on the price, I'm sorry, $29,821. Ethereum right now is just over $2,000. Oh man, go back to Bitcoin. Man, it's below 30,000. Where will it end? No idea. No idea. Whew. Ethereum $2,027 is down 3.3% today. It's down 9.5% on the week. That's a lot. And in the month, it's down 33%. Whoa. That's too bad. Everything's down. Everything's down. You know, I think 2 of the top 10s just dropped out. Luna and UST. Is that what it was? I don't... Man, just gone. Boom. So there's some new slots. Anyway, everything's down a crap ton. Down, down, down. Look at this, man. Where's Shiba Inu, man, on the month? The month is this one right here. Shiba Inu down on the month 50%. Down on the week 15%. Everything's down. Just horrible. Horrible. Dogecoin 38% on the month, 15% on the week. It's just nuts. So this is crazy. Anyway, what else do we have? Let's scroll down. Algorand number 29 token is down 37% on the month, 19.7% on the week, and it's just under 1% on the day. It's at 46.82 cents. Well, I don't even want to look at this chart. These charts, it's just horrible. All right. Oh man, here's the news on Guardian Platform. What do we got? Do Kwon, he's the head guy of Terra Luna, and he suggests that Terra Luna hard fork is going to revive the protocol. No, dude, Terra Luna's over, man. I'm sorry, it's just over. You know, let's look at that chart. Just, it's no good. Damn, dude, Terra Luna is at 0.000199. I can't even. Did like a week and a half ago, is it like $80? Dollars, not cents. So it's done. Yeah, if you want to just like super gamble and you're like, oh, maybe it'll go up 50% in the next couple of days. Cool, dude, throw your money there. But I'm not doing that at all. I've lost too much money in crypto. I'm not playing that game, and it's never going to come back. I'm sorry. Don't be married to Terra Luna. Like, it's not your girlfriend. It's all good, dude. It's just a token or a coin. Just leave it alone. It's gone. Walk away. Walk away. I'm sorry to say that. Sad as shit, right? Tons of people lost a shit ton of money. Tons of dough. Man, I don't know. And you know what's going to happen? Now we're going to get regulations that we don't want. Not legit regulations that we need. We're going to have the government going, oh man, blah, 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 blah. And there's just going to be some just crazy regulations that are just going to screw us over in crypto. That's just my 2 cents. Anyway, let's just move forward on this. Oh man, here's one. I'm going to throw this in my video. I got a clip from somewhere, and we're going to talk about it. Former Fed Chair Ben Bernanke says Bitcoin is mainly used for underground economy for illicit activities. Ooh, thanks for the heads up, buddy. You're just a... All right, so I'm taking a clip off of this. It's from Anthony Pompliano's The Pomp. I follow him. He's a really smart guy. Well, he's got 382,000 subs on his YouTube channel, but he's got a lot of good information on crypto and Bitcoin. But this is, he talks about Ben Bernanke, and I'm gonna record a little bit of it, and man, this is ridiculous right here. So this is an interview, obviously, on CNBC with whoever, Squawk Box, whatever, Ben Bernanke, and honestly, man, Listen to this.
Let's just hear what Ben had to say for himself. Here's the video.
Bitcoin and other currencies, cryptocurrencies whose value changes minute to minute, they've been successful as a speculative asset. And you're seeing the downside of that right now. But they were intended to be a substitute for fiat money. And I think in that respect, they have not succeeded. Because if Bitcoin were a substitute for fiat money, you could use Bitcoin to go buy your groceries. And the main use of Bitcoin is mostly for underground economy activities and things that are illegal or illicit. I don't think that Bitcoin is going to take over as an alternative form of money.
You don't buy into the idea of it as being a store of value or some kind of version of digital gold.
Gold has underlying use value. You can use it to fill cavities. The underlying use value of Bitcoin is to do ransomware or something like that. So one of the other risks that Bitcoin has is that it could at some point be subject to a lot more regulation.
Now, of course, after watching that, you're either cringing or you're laughing because there's only one of two different emotions you could have.
That dude just said the underlying use of gold is to fill your teeth with, fill your cavities with gold, man. Like, is he serious? Like, you're serious? Like, you're Ben Bernanke, bro. You ran, the Federal Reserve? Is that what your brain is? This is not that ain't good, right? That's not good. It seems to me like this guy doesn't really understand what he's talking about when it comes to crypto. He doesn't understand crypto. He doesn't understand Bitcoin. He doesn't really understand it because maybe his brain has been focused on the monetary system and stuff like that for the last 50 years, which is fine. Like, that's cool. You can't ask me to run a business because my main job is not that. It's fixing stuff. So I get it. My brain is in a different spot. But anyway, you don't get a free pass, dude. You're the head guy. You were the head guy. No free passes for you. You should at least know that, especially if you're going on Squawk Box on CNBC to edify us on crypto and pros and cons. Oh, man. That's one thing I didn't catch when I first saw this. He says one of the risks Bitcoin has is it's going to be subject to, or it could be subject to, a lot more regulation. Yes, I understand that, definitely. And that's one of the reasons it's mega volatile. But if we actually get some decent regulations, regulatory clarity is the word, we'll get big money coming into crypto, mainly Bitcoin. But we'll have to see. But if he's the head guy saying, regulations are coming and they're going to hurt crypto, he probably knows more about it than I do. Just saying. All right, here's another channel I just started following. I've been trying to find this guy. I don't know. Okay, what's his name? Will Clamente. He's super squared away dude. He looks super young. He's probably like 20 years old, but that dude's smart as hell. Super awesome technical analysis guy, like blockchain analysis stuff, on-chain analysis, all this crazy stuff that I can't even figure out. But he's been on Pompliano's show, and in some other shows I've seen him on there doing AMAs or whatever, and he's just explained some market stuff. But he's got his own channel. Apparently it's called Blockwear Team. I just started following it, and it's good. A couple days ago, and then what pops up? Lyn Alden. Look, this is an interview that was like, 45 minutes long. But then he cut this clip out. This is like 5 minutes talking about what happened with the Tera Luna ecosystem, right? And she does a really good job of explaining it. And I was going to take the clip out of the other video, but I'm just going to take it off of this video. So we're going to go over that real quick. Super squared away. Both these people. It's amazing. I've also seen her on the YouTube channel What Bitcoin Did with Peter McCormack. He's a British dude. He seems to be super squared away. He's got really good long form interviews. It's a lot of good information on the channel. Anyway, I've seen her there too. I guess what I'm saying is these people are way smarter than I am. I'm just taking some clips off of here to spread the word to the people who are watching my channel. Okay, good information. I know it's 5 minutes. Let's just look at it.
You kind of walk us through, what happened and what caused that meltdown, and as well as like how does the Terra protocol work?
Yeah, so the Terra ecosystem is basically based around algorithmic stablecoins, and those are very different from collateralized stablecoins. And so for collateralized stablecoins like Tether or a USDC, they hold a certain amount of assets that can be redeemed, for those tokens. Basically, you're at least supposedly backed one-to-one by assets. Whereas in an algorithmic stablecoin, they use software to try to make a token worth $1, even though it's not actually backed up by any dollars, right? It's just kind of this artificial mechanism to try to maintain it at the value of $1. And as one might expect, those have been fraught with failure. You're kind of the mechanism is you're trying to be like an emerging market central bank, except without capital controls and without an economy to tax. It's kind of like this based on this first in, first out, and a really shaky set of kind of, economic principles that can only last so long. And so the way that worked is, if their stablecoin was below the peg, it was below $1, you could basically arbitrage that in order to get that back up using their other token, which is Luna. And so basically what it does is it pushes the volatility over to Luna. And as long as their stablecoin demand is increasing, it also increases the value of Luna over time generally. But the problem is that the demand for that was artificial. It was based on artificially high yields from various VC incentives and things like that. Basically, it wasn't a sustainable organic demand. It was kind of this, you can call it a Ponzi scheme. That's not really far off. Basically, it's this kind of front-loaded, unsustainable type of thing to draw capital in. And, those are vulnerable to attack. Even without an attack, basically, UST surplus yields were going to dry up. And so basically we saw a run on the bank. Basically people started to see that it was failing and they all wanted out at the same time. And so Luna's equity was brought down to basically zero. You lose 99% plus of the value, it goes to zero, and the peg breaks. And so this was something like, if you combine Luna and their stable coins, it was nearly a $60 billion, protocol, and that was wiped out in a matter of days. And a challenge is that I think they saw the writing on the wall. They were worried about the possibility of a death spiral, so they started buying other assets ahead of time, kind of like an emerging market holding treasuries or gold as a reserve currency that they can sell if they want to support their currency. And so they bought Bitcoin, and then they had to sell that into the market, or specifically they were loading it to market makers to do various ways to try to defend the peg, and so they had to sell Bitcoin into a weak market. And now there's contagion because multiple funds had exposure to it. This was kind of like a Lehman Brothers moment for the crypto space. And, if we zoom out for a while, so there are a number of people warning about this. I warned about it in the month ahead. And if we zoom out at why this happens over time, right? If you look at business cycles, right? So, and I've shared this with you before, that the PMI cycle, so Purchasing Managers Index, that's kind of a gauge of is economic growth accelerating or is it beginning to slow down? And it's not whether it's growing or shrinking, it's whether it's accelerating or decelerating, although if the number gets low enough, it becomes outright shrinking. And what you generally see is that during accelerating periods, that's when liquidity is flowing. It's easy to get credit. Often the Federal Reserve is pumping money into the market. You have these economic booms in the United States and many other parts of the world, and anyone with like a narrative can sell these tokens, these unregistered securities and offshore regulatory gray zones, right? They can just pull in capital, and when you have those declining PMI environments, liquidity being withdrawn, it's like the tide going out, and anyone who's swimming naked gets exposed, or at least a lot of them. And we generally see these boom bust cycles. And so that's essentially what we're seeing now, is that after a big giant rise up in PMIs and economic growth and liquidity, we're now getting a pullback in all those things. And so all these things that were kind of based on first in, first out, Ponzi-nomics, the vast majority of that is just getting cleared away. And unfortunately, that's a very large percentage of the crypto space.
So $60 billion in the ecosystem that just vanished to nothing. I mean, that's just crazy stuff. Man. Brutal. Okay, I'm not a super good technical analysis guy at all. I don't even have the right chart. I don't know. Anyway, this is the 1 year chart for Bitcoin. Look, the thing is, we were making higher lows. Bitcoin was for the last year, of course. I mean, up to here, right? So, here's the low. Here's another low right here on January 2nd. Here's the low. Let's start over. July 20th, 2021, here's another low. January 22nd, 22. Lows keep going up until right about here, which was the beginning of May, which was only like a week ago, and then it just plummeted, man. Straight plummet, May 6th. Boom. So Bitcoin has crossed the trend downward. of lower, it was making higher lows, upward trajectory, right? Kind of, right? Look at this chart, doesn't really look that way. Anyway, I guess if we go back to here, beginning of the year, the low, and it just keep going higher. So every time it would go up, come back down, but it wouldn't go as far down as before. That's the whole point. And then it just crossed that trend. So who knows where the bottom is going to be? Are we at the bottom now? We're at 30,000. There's a lot of resistance there, or support, I mean. We'll see what happens. I don't know. Personally, I don't know a whole bunch about this stuff. I just absorb a lot of content, try to figure it out from some people way smarter than me, and we'll just have to play it by ear over the next, honestly, I think the next like 3 months, we're going to have to play it by ear. I mean, with inflation going up and what, now the recession, I mean, dude, we're going to have to wait until the second quarter results or second quarter information comes out. So it'll come out in July, I assume. If we are officially, the United States is in a recession, then yeah, dude, stock market's going to go down a whole bunch more, and crypto also is going to go down a whole bunch more until there reaches a point where Bitcoin decouples from the NASDAQ. And I don't know when that's going to be. Hopefully it happens this year, and it will be a store of value at that point. But right now it's not. So just my 2 cents. Okay, we're just going to take a look at some prices real quick, man. Saitama is at 803638. It's down 9% on the day, 11.8% on the week. Surety token is at 110638, and it is down 5% on the day, 23% on the week. Scratch token, it's up 0.25% today. It's down 15% on the week. It's at 10.06328. Guardian token is at 701831. It's down 5% or 4.5% today and 20% on the week. Archangel token is at 10.04389. It's pretty low, pretty much the all-time low, and it is down 13% on the day and 30% on the week. Brutal. All right, that's just a quick update on some things on the market. Brutal market out there. I don't see a recovery happening anytime soon. Some people do, some people don't. I'm not sure what's going to happen, but staking pool opens, it's open, and we'll see how this all plays out, you know. But we're all going to make it together. Yeah, we are, you know. Dollar cost average in, you know, right now is a good time to buy if you got extra cash. Personally, that's me. I mean, I don't have any extra cash. I spent it all already, but probably in about 3 months from now, I think I might have a little extra cash, and I got a couple projects I'd like to throw a little bit of money at. And right now I could get 10 times more tokens than I could have last November at the all-time high. You know what I mean? You know what I'm saying? So anyway, we're going to move forward and just keep looking at some news and tracking the staking pool when it closes and see how that plays out. We're going to have 10 trillion tokens in the staking pool for Archangel for the channel, and we'll see what kind of rewards happen with that. Pretty excited for staking pool number 3 and 4 and 5 and 25, but this one will probably be, staking pool 2 is going to be better than staking pool 1. Staking pool 1, we had 1 trillion tokens, and I'm pretty sure what ended up happening is at the end we ended up with, after 90 days, 2% more tokens than we staked, which is great. You know, I mean, price went down a whole bunch. That's just the way it is. So if the price doesn't change at all or whatever, and you get 2% of the tokens that you staked, and then 2% in 2 other tokens, and what's wrong with that? You know, can't see anything wrong with that. So anyway, thanks for tuning into the channel, Blue Collar Crypto. Really appreciate it. And I'll see you guys next time. All right. Thank you.
I feel like I need a stiff drink after that conversation. A lot to worry about in there.